US equity markets ended last week lower. This came despite news that the US economy expanded fairly strongly in the 3 months up until September of this year. However, equity markets have moved lower as they are still feeling like things have got a little bit out of hand over the past few months. US housing data did show that the housing recovery is still fragile. We have to remember that it was in the US housing market that this all began, and investors will be keeping a close eye on when this recovery really takes hold and if it is sustainable. Consumer spending data out of the US was also weak, which added fuel to the negative sentiment in markets. As a result of all this, the US dollar was back in favour, and of course the New Zealand dollar was trading lower. On Monday morning, we were trading at 71.80 to the US dollar. Last week, New Zealand wholesale interest rate markets did move lower. Shorter term interest rates moved lower by 18 basis points and longer term rates were lower by 10 basis points. This came as a direct result of the official cash rate announcement on Thursday. Markets reacted fairly strongly to the negative commentary provided by Dr. Bollard. The Reserve Bank have indicated that they will keep the official cash rate fairly low at 2.5% right through until the end of 2010. Despite this, we believe that the Reserve Bank can't ignore the positive influences coming through in our economy. This will mean that they have to increase the official cash rate earlier in 2010, as early as April. This will likely mean that shorter term rates and bank bill rates will start ramping up fairly strongly early in 2010. There was some positive news coming out of the Asian markets for New Zealand beef last week. While it is too early to tell if this is a fundamental change in the market dynamics, this is still positive news. Asian markets have been very quiet over the past 12 to 18 months, so the fact that some countries are starting to demand a little bit of New Zealand beef is definitely positive news. Demand fundamentals in the US are still fairly weak, with cow and bull prices trading fairly similar to last week levels. With the dollar where it is currently sitting and our current forecast for it to stay at these levels or even move higher, this will put pressure on schedule prices for this current season. This will likely mean that there will be further pressure for these schedule prices to move lower.